Stocks climbing again today with some of the more defensive corners of the market trading at highs. You've got staples and healthcare, two sectors that are hitting all-time highs during the session. Joining me now to share how he's investing through the end of the year, Kevin Dreyer, co-CIO of Value at Gabelli Funds, also oversees the Gabelli Asset Fund. So you've got some value-oriented opportunity here.
Yes, I think so. I mean, we are bottom-up investors. We have a value style. And obviously, growth has really led the way for a long time now. But you started to see this rotation in early July, and that was in line with looking at what we're all talking about today. And that's the Fed finally cutting rates, and we've seen value and small caps start to do better, and we think we're poised to capitalize on that.
It's hard not to get overwhelmed by the headlines of, like, since August 5th, you've got Meta up 17%, Amazon up 16%, Apple, Microsoft, Alphabet, NVIDIA. Those mega cap names that have driven us through the year are going back in, grabbing the spotlight again. Why should investors consider at this point something that is more value oriented?
Well, I think one thing to note is that as rates come down, that tends to lead to an upswing in M&A activity. Mm-hmm. So we just had an announcement of Mars buying Kenova, for instance. Food stocks have had a tough year. The consumer stretched, inflation's been biting them, so they've been struggling with volume growth. But snacking has been a good area within food. So Mars is buying Kenova, which the former Kellogg, they split up into two pieces, their cereal business, WK Kellogg, and then Kenova. So we think there could be other deals to come in that sector. My favorite is Bellring Brands, BRBR, which is kind of a mid-cap stock.
Known for Premier Protein shakes?
Exactly. Premier Protein, they're growing mid-teens right now in an industry that's struggling to grow at all. We've got mid-teens growth there. Most of their distribution through Walmart and Costco, so they've got a big distribution opportunity. And we think they'll continue to do great on their own, but somebody else might want to buy them too.
What about Campbell Soup?
Yeah, so Campbell's is an interesting situation. In this case, they recently did a deal. They bought Sovos Brands, which owns Rao's pasta sauce. Again, very fast growing. So they're doing a good job on their own, but now they've got a meals business that's a little better situated, and then a snacking business. So they could end up following that Kenova playbook. We'll see. They've got an investor day coming up in September, so they're going to outline their plans going forward.
You know, it's a meaty narrative to look at the rise of the GLP-1 drugs and the impact, especially on snack foods or packaged foods and things like that. Are you discounting the impact of weight loss drugs on this sector? We're
looking very closely at it. That has been a narrative over the last year or so, definitely. I don't think there's really been an impact yet in the numbers. I think it's been more just the inflation, the consumer stress. But that's where a company like Bellring with Premier Protein, they're actually a great GLP-1 companion because people need protein when they're on these drugs and to avoid muscle loss. So that can be a great product to use and convenient.
I'm looking right now at the Russell 2000, on track to close today, up more than 3%. Talk a little bit about the opportunities in the small caps.
Yeah, I mean, we see a lot of opportunities in small cap stocks, I'd say, across the board. Right now, they trade at a massive discount to their large cap peers. We're an all cap manager, so we look across the capitalization spectrum. But I would say that, yeah, by and large, we've been buying more small caps lately, and we think they've got a long way to go.
We have consumer confidence data coming out next week on Tuesday. Do you think that will set the tone for investors in some of these other areas that are so exposed to consumer discretionary?
It could. I mean, my sense is the consumer is pretty weak right now. I mean, I know we've had kind of mixed data coming in over the last couple of months, but it kind of feels like it's lower. So I just think that portends for rate cuts, which now we all know are coming. It's a question of how many and how far do we go, and you know, we'll see.
I cover gambling. I don't know if you're a bettor, but if you were betting, would you make a bet on how many?
How many rate cuts or
yes.
How big? We'll see. That's not really our game that we play, but I would say, you know, it's going to be probably successive rate cuts through the year. We'll see how the economy holds up.